For decades, banking felt, well, incredibly stable, didn't it? Almost set in stone.
Like granite in regulation, exactly.
But if you dig into the sources we've looked at for today, the whole business architecture of finance, it's going through this massive change. Some are calling it a radical inversion.
Yeah, the whole thing's being flipped upside down.
And that's really the core tension we want to get into today.
Right. Our mission here is to really dissect this shift from what's called inside-out banking to this really powerful, disruptive, outside-in approach.
It sounds fundamental.
Oh, it is. We're not just talking about, a new website design or a slicker app. This goes much deeper. We're looking at the basic architecture, the culture, the technology underpinning this whole revolution.
Okay.
It's really about understanding why some of the older legacy banks are, frankly, struggling to keep up, and how these newer digital-first players seem to be winning.
By focusing on the customer, you mean?
Exactly. By putting you, the customer, right at the center and building their entire business around your needs, your experience.
That's a really powerful difference in concept. I mean, pre-digital banking worked inside out. It was all about internal control, stability, maybe efficiency for the bank itself.
Correct. Optimized for the inside.
But today, customers, the market, they demand the opposite, right?
Completely.
So let's try and unpack the anatomy of these two systems. Maybe start with the traditional one, the inside out.
Okay, so in that traditional world, the structure is very linear. It moves from the inside outwards.
Yeah.
It starts deep inside with the business core and the tech core. Think rigid systems, heavy processes, very compliance-focused.
Got it, the engine room.
Exactly. And those core systems basically dictate the limited range of products the bank can even create or offer.
So the tech limits the product.
Often, yes. Then those products get pushed out through distribution channels, branches, maybe early online portals.
Okay.
And only then, kind of layered on top at the very end, comes the customer experience. And wrapped around all of that is the brand proposition, which honestly often feels like just a marketing layer, a veneer.
So the old system, maybe decades old, dictates everything. And the customer experience is just fitted around whatever those systems can manage.
Pretty much. The bank is essentially saying, look, here's our product. It works like this. You, the customer, need to adapt to our process.
We build it, you figure it out.
That's the essence of inside out. Now watch how it flips.
Okay.
The digital first, the outside in model, it starts right at the edge with you, the customer. It begins with the brand proposition.
The promise.
Yeah, a clear purpose, a promise to the customer. And they use that to design the ideal experience. What should this feel like?
Experience first.
Experience first. Then that ideal experience tells them what the best distribution channels are, mobile app, web, maybe something else entirely.
Right.
Which then informs what kind of products are actually needed to deliver on that promise and experience.
And the core systems.
Only then, right at the end, is the business and tech core built or maybe adapted specifically to support that whole customer-focused ecosystem.
Wow. So if the customer needs something specific, the bank actually changes its internal workings to deliver it.
That's the goal. It's a complete inversion of priorities.
That contrast is stark. Let's stick with the traditional bank for a minute, though. What are the real concrete pain points that this inside-out way of thinking actually creates for us as customers?
Well, the fundamental pain comes from that culture. It's process-driven, compliance first. Now, for generations, that focus on control, on risk mitigation, it created stability, and that was good, necessary even.
Sure, you wanted your money safe.
Absolutely. But that culture inevitably breeds rigidity and silos, and that rigidity is what hits the customer.
Yeah, I was struck by this idea in the source material about the customer experience being almost an afterthought, like those super long application forms or complex logins with multiple steps.
Right.
The sources say this friction isn't like an accident. It's there because the internal needs, getting specific data for regulators, making sure forms are filled out, just so those things automatically trump the goal of a smooth customer journey.
The process dictates the experience, not the other way around.
And you mentioned you can spot this architecture through technical signs. Yeah, I found that bit fascinating too. Those technical tells, like when you see that message pop up. Sorry, systems unavailable due to scheduled maintenance Sunday at midnight. Ugh. Yes, we've all seen that.
That need for planned downtime, that's a dead giveaway. It screams legacy system designed for batch processing. Modern cloud-native systems, they deploy updates constantly without you even noticing.
No shutdowns needed.
Exactly.
Yeah.
If you have to turn off the lights to update, you know the core is probably old and inflexible.
And the internal structure, too. If you have deposits in one silo, loans in another, cards somewhere else, the customer experience feels disjointed.
It really does. Because in that inside-out culture, each department kind of guards its slice of the customer. So you,
Yeah.
the customer, end up having to navigate the bank's internal org chart just to get something simple done. It feels fragmented.
Okay, so if the old way is defined by internal control and rigidity, how does this new outside-in model manage to be, well, purpose-driven but also agile and effective?
It really does start with that clear purpose. The brand sets the direction, the why. Digital banks often launch with a genuine mission, like make banking fair and transparent or help people achieve financial wellness.
Okay. But let me push back slightly there. Is make banking fair a real operational purpose, or is that just, nice marketing talk? Doesn't it still boil down to the tech stack, not the slogan?
That's a fair question, a critical one. The purpose is the foundation, yes, but the execution relies on designing the experience right from the start. That's the key difference.
Okay.
Neobanks, these digital players, they use human-centered design. The user journey literally is the product. They obsess over seamlessness, opening an account in, 5 minutes on your phone?
Yeah, it can be incredibly fast.
And they operate like they're in continuous beta. They're constantly tweaking, deploying updates weekly, sometimes even daily, based directly on customer feedback.
And what about the regulations? The thing that seemed to paralyze the old model. How is that handled differently?
That's where this idea of compliance by design is so important.
Compliance by design. Okay.
It means they don't see regulation as a roadblock you tack on at the end. They treat it as a design constraint from day one. They build the necessary security into the seamless flow.
So instead of adding extra steps for security?
They embed things like advanced fraud detection or use
Yeah.
biometrics for login. Compliance becomes safe and almost invisible. It ensures safety doesn't wreck usability.
And this must require a totally different way of organizing the teams inside the bank, away from those silos we talked about.
Absolutely. It demands a shift away from siloed departments towards cross-functional, agile teams.
Agile team.
Yeah, small teams with people from tech, product, marketing, compliance, all focused on a specific customer journey, like onboarding or borrowing.
And I guess their goals, their metrics would change too.
Completely. Their KPIs, key performance indicators, they shift away from just selling more products.
Right.
They focus much more on customer metrics, things like NPS Net Promoter Score.
Okay, for listeners maybe not familiar, what does a high NPS, say plus 50 or plus 60, actually mean for a bank compared to, well, the average?
Oh, it's a huge difference. NPS basically asks, how likely are you to recommend us? Traditional banks often score quite low, sometimes even negative, meaning they actually create more detractors than promoters.
Okay.
Ouch, yeah. Whereas a score in the plus 50s or plus 60s, which you see with many digital leaders, means they've built a real base of enthusiastic fans, genuine promoters.
Wow.
It shows that they're focused on engagement, on daily active users. They understand that loyalty today is built through genuine utility and delight, not just because it's a hassle to switch banks.
And that utility, that delight, it's only really possible because of the technology underneath it all.
Precisely.
So let's talk about that tech stack, the engine that makes this agility possible.
Okay. So in the traditional world, the product pipeline, it's just slow. Waterfall development cycles that can take years for a big launch.
Like the old way.
And innovation often happens in these isolated labs. They create cool prototypes, maybe, but then they really struggle to get those ideas integrated into the main business.
The corporate immune system problem. I love that phrase. What is that system trying to protect?
It's trying to protect the status quo. The established processes, the management structures, the legacy tech, they actively, almost instinctively, reject the new thing because it's different. It threatens the current way of working.
Organizational antibodies attacking the innovation.
That's a great way to put it. It often means the new idea gets starved of resources or can't get plugged into the core systems, and it just withers. The sources we looked at said 3/4 of banks admitted their legacy tech actively prevents them from making timely user experience improvements.
3/4. Wow. And that legacy tech, we're talking big monolithic core systems, right?
Okay.
Sometimes running on languages like COBOL from the 60s, designed for stability above all else.
Exactly. And the technical debt is just enormous. Crippling, really. Some estimates say up to 70% of a traditional bank's entire IT budget just goes to maintaining those existing systems.
70%. Just keeping the lights on.
Just upkeep. Imagine that. It leaves almost nothing for actual innovation, for building the future.
So the digital challengers must be running on something completely different.
Totally different infrastructure. They're usually cloud native.
Built for the cloud from day one.
Right. Using microservices architecture, API driven, which basically means instead of one giant fragile system,
Yeah.
it's like hundreds of small, independent, resilient services that talk to each other. Modular.
Okay, like building blocks.
Kind of. And this gives them incredible agility. They can update or replace one small service without affecting the whole system. Plus, massive cost efficiency.
I'm cheaper.
Once they reach scale, these digital banks can operate at cost levels maybe 5 to 8 times lower than traditional banks because they just don't have that huge burden of technical debt.
5 to 8 times lower?
Yeah.
That's game-changing. Okay, so the tech changes the speed and cost. What about the relationship with the customer? That seems like the other big divergence here.
It really is. The traditional relationship was, well, transactional and intermittent.
You only went when you needed something specific.
Exactly. You interacted with the bank for a deposit, a loan, maybe check your balance. The relationship felt quite formal, like a handshake.
The utility.
Yeah, the bank was a necessary utility, and your loyalty was based mostly on reliability. They didn't lose your money and just inertia. It was hard to switch.
But today's customer expects something more integrated, don't they?
Much more. The expectation shifts to a relationship that's relational and continuous.
Always on.
Almost. The bank is seen less as just a utility and more as a potential partner, an advisor, maybe? The relationship becomes this ongoing digital conversation happening right there in your pocket.
Through the app.
Through the app, yeah. Thanks to all those daily micro interactions, real-time spending notifications, budgeting insights, proactive alerts about bills.
And presumably that builds trust differently, too. Through transparency.
Definitely. Simple fee structures you can actually understand. In-app controls for your card security. It leads to much higher engagement because customers feel informed and, crucially, in control.
And does that engagement translate to loyalty?
It seems to be the new loyalty. Branches and long-standing relationships matter less now. The data confirms it. One source cited 82% of bank customers saying the quality of the online and mobile experience is a key reason they stay with their bank.
82%.
So the experience isn't just a nice-to-have feature anymore. It is the loyalty program.
Okay, the need for this shift seems undeniable. The benefits are clear. But actually making this inversion, that sounds incredibly hard for an established bank.
It's hugely complex. The analogy often used is it's like changing the jet engine mid-flight.
Yeah, that paints a picture.
It really captures the difficulty, doesn't it? It requires massive, costly, deep changes, not just to technology, but to the culture, the processes. It's like organizational heart surgery.
And overcoming that cultural inertia.
That's the biggest hurdle. Yeah, leaders, employees, they're naturally reluctant to disrupt products that are established and, still profitable, even if they know those products are outdated or offer a subpar experience.
It reminds me of that quote from Jim Maris, the banking strategist. He said something like, culture is key to digital transformation in banking, not technology.
That's spot on. You can buy the cloud platform, you can hire the engineers, but you can't just buy the willingness to break down those internal silos and fundamentally change the mindset from inside out to outside in.
So the challenge is structural, but the fix has to be cultural.
Absolutely. And look, traditional banks still have huge strengths, right? They have capital, they often have regulatory trust built over decades, and they have massive customer bases.
True.
But to survive, maybe thrive, in the next decade, they have to figure out how to combine those traditional strengths with the agility and the customer obsession of a digital startup.
It's a tough balancing act.
Yeah.
So wrapping this up, what's the final takeaway for you, our listener?
Well, the sources we reviewed strongly suggest that the cost of not changing the risk of just standing still and being overtaken by big tech companies moving into finance or by these super agile fintechs, that risk is now much, much greater than the calculated risk of attempting the transformation.
Doing nothing is the riskiest move.
It seems that way. It forces a really existential choice. So maybe we leave you with this thought to consider. Which financial institution in your own life feels like it's already operating like a true digital native, like it's genuinely optimizing for your experience, not just its own internal processes? Think about what specific things they do. What friction-free features do they offer that maybe your main bank doesn't?
Because that difference, that gap in experience, that's the new competitive benchmark.
Yeah.
And all the signs suggest that gap is only going to get wider.